Okay, GM. Hey, everybody. I think we're just about ready to kick things off for today's spaces. I wanted to start by saying a huge thank you to everybody for joining. We've got a really stellar lineup on the spaces tonight, and really excited to introduce a new concept to OKX, which is friends. So The intention with this space is it'll happen every 2 weeks. My name is Sam. I head up product marketing for the wallet team at OKX, and you can expect to have either myself or my colleague Matthew hosting these sessions every couple of weeks. The format is super low key. We're not here to hear about OKX. We're here to hear from our guests. So without further ado, I wanted to probably do a quick round robin and introduce everybody on the line. You guys can just take it one by one, quick, simple intro, and then pass it on to somebody else. Wen Moon, do you want to kick things off for us? Hey.
Hey guys, it's I'm Wen from Arbitrum. Off-Chain Labs, officially the lead for the ecosystem success partnerships here. Glad to be here.
Thanks for coming on, Wen. Looking forward to hearing a lot more from you in a bit. And Johnsy.
Yes, sir. Hey, nice to meet you, and good to be here with you all. Jonesy, I help coordinate communications for GMX. GMX, one of the pioneering on-chain perpetual exchanges. Find us at app.gmx.io and keep listening, and you'll learn a lot more about all the amazing protocols that Arbitrum has to offer.
Nice, thanks for coming on, man. EY, hey.
GM everyone, it's EY from Pendle. I'm from the BD team, and my focus is on expanding Pendle's ecosystem. So getting our PTs and LPs integrated with our partners, and also working with various wallets and ecosystem partners.
Awesome, welcome. Thanks for coming on, man. And Isaac.
Hey, love to be here in the spaces. Thanks for having us. This is Isaac Prada, Director of Communications and Project Management at Radiant. We at Radiant, of course, one of the top lending and borrowing protocols on Arbitrum. Love to be with all these amazing protocols here in the spaces today.
Love the energy, dude. Thanks for coming on. And Ryan. Hey, Ryan.
Hey, guys. A pleasure to be here today with you guys. I'm Ryan. I'm from Mix. We are one of the newer perpetual DEXs live on Arbitrum. So MX is a perpetual DEX that's offering centralized exchange level fees with no slippage for decentralized users in a fully decentralized manner. Yep, pleasure to be here with you guys.
Awesome. Thanks for coming on, man. Shreddy.
Hey, just testing. Can you guys hear me?
Loud and clear.
Yep.
Fantastic. This might be the first Twitter space from the air. I'm actually on a plane right now on my way to permissionless, but very excited to be here, and I had to hop on so that I could speak with all my wonderful friends here. Shreddy, marketing and BD over at Jones DAO. Yield strategy protocol, building on top of some of the great protocols that we find here alongside on this panel. Just super happy to be here, and I'll let you know if we hit any turbulence.
Amazing. I love the commitment. I'm imagining you with a crowd of people crowding around you now, listening into the spaces out of pure fascination.
I'm literally in the back of the plane. I do not buy business class. So yes.
Amazing. Cool. And I think we need to get Darius up. Can you guys, Justin, can you get Darius up? I can see he's requested. Or maybe just give it a minute. We've oh, there we go. Hey Darius, sorry to keep you hanging. Welcome on, man.
No worries, dude. My connection blocked. Yeah, cool. I'm Darius from Vertex. I'm one of the co-founders. We're one of the perp dexes on Arbitrum, but now also cross-chain, so we're on 5 different EVMs. Yeah, I'm looking forward to just getting into it and having a chat about stuff.
Sweet. Well, thanks for joining. So listen, I think today's space is, as I said, the idea is really to have a really informal chat. and kind of strike a balance, I guess, because we've got probably a whole bunch of people on from the OKX community who are looking to learn more about Arbitrum and the projects that are building in the ecosystem. And I mean, I've got to say, like, seriously heavyweight lineup today. So really huge thank you to everybody who helped make this happen. And then also for the people who are coming into an OKX Spaces for the first time, welcome to you. It's great to have you on. Today is a great moment to come into the OKX community, not least because we just launched something called EcoHub. So EcoHub is a new page within the OKX wallet app, whereby you can basically interact with some of the leading ecosystems within the blockchain space. And it's basically a secure way to access the latest campaigns, content, and top projects from a secure spot, i.e. your OKX wallet. So do go check it out. It's in the Discover tab on the app. And we're just getting started. And big thanks to everybody who's on this Spaces, because you guys have been a big part of getting that up and running. So give it a try and let us know what you think. Okay, shill time over. Wenmoon, I was wondering if we could hear from you first, and maybe if you could just give us a bit of a lowdown on kind of where Arbitrum's come from, where we are today, and kind of what you're seeing as being really exciting within the Arbitrum ecosystem.
Yeah, absolutely. And now seeing the full lineup here, it's pretty stacked. So very happy to be here on the Spaces with so many of our greatest builders on Arbitrum, and there's probably many more in the audience. And of course, with you guys at OKX, the ecosystem hub here is what we're kind of like mentioning is the latest product launch, and I think many of our builders are going to take a lot of advantage of that, having so many more users being able to access the product. So for anyone who hasn't really used Arbitrum yet, especially like mainly OKX users who uh, don't really touch on chain maybe so much, and usually just doing their centralized activities and maybe going from their wallet. I think what's going to be really awesome is you guys will be able to like use these dApps, use our dApps on Arbitrum now through the ecosystem hub, see what's in the spotlight, what's got the most rewards, what's hot, what's new, what's the latest on Arbitrum, and use all of that. So yeah, these like to kind of take it back. Arbitrum started off a couple of years ago now, and it still is the only optimistic rollup with fully working fraud proofs, fully stage one rollup. So essentially the most secure rollup that we have currently in, and also the largest TVL, the largest transactions, like all those kind of metrics we kind of always crushing on. But like not to sort of go into that too much, but I think the most important thing about Arbitrum is ecosystem and the amount of things that you can do on Arbitrum today, and since the beginning of Arbitrum has always been uh, really broad, and you can see really here is just like a small slice of the builders that we have. But Arbitrum kind of started off as an extremely DeFi focused chain. Now we kind of are Goliath in both DeFi, gaming, and handing out our tech to other chains and other people looking to build their own chains. And that's like kind of what I focus on a lot right now. But yeah, of course, having being managing the ecosystem here means that I get to work with all of these lovely people here. You have perp dexes, lending protocols, and everything that essentially as a user of crypto, anything that you really want to do, if that is to go long, to go short, speculative, if that is to like borrow against your assets, whatnot, like all this kind of stuff can be done in Arbitrum. Whether you want to play your favorite game or whatever it is, all these activities run on Arbitrum, and I hope that this partnership means that you as a user can essentially do this in the most easiest way possible, the most user interactive way possible. Yeah, and I hope that gave a good rundown to anyone that doesn't know what Arbitrum is. But yeah.
Awesome, thanks, Ren. Yeah, I mean, you touched on kind of making user experiences as easy as possible, and I'm sure that we're going to hear a little bit about kind of chain abstraction and some of the kind of simple DeFi strategy, kind of one-click strategies that I know John Stout have been working on. So looking forward to hearing a lot more about that a little bit later on. Can you maybe just touch on just a little bit, I guess mainly for the OKX community, kind of key differences between Arbitrum and Ethereum from, I guess, a fundamentals point of view when it comes to the technology?
Yeah, absolutely. So, like, for someone that's like familiar with Ethereum and maybe not so familiar with Arbitrum, wants to know exactly why Arbitrum needs to exist. Arbitrum is sort of an L2 on top of Ethereum, which means that essentially Ethereum's transactions are very slow and they are very limited in the amount of transactions that can be posted and the amount of data that can be posted. Of course, we have transaction fees right now that are very low, but that won't remain if we try to onboard the next billion users on chain, which is essentially the end goal of everything that I think everyone in crypto is trying to do. And putting them on Ethereum means that we need to help scale. And so Arbitrum is an L2 which helps scale Ethereum, and by that, Arbitrum has much faster block times than Ethereum and much lower transaction fees. There's a lot more that goes to it than that, but like the high level is those two main things, which just means that essentially the block times are 250 milliseconds, which means that as soon as you post a transaction, it's pretty much executed, at least from your eyes. It's as fast essentially as a centralized exchange, and that's why so many of the projects that are on the space today even are actually perp dexes, especially because if you're trading perps and these kind of things, you need your activity to be incredibly fast. You need to have very fast reactions for the blockchain to actually input your transactions. And this sort of activity is simply not possible on Ethereum, where the block times are like 12 seconds and takes so long to get a confirmation for your trade. So yeah, best user experience in that regard, and really all we're trying to do is push Ethereum further and than it currently can do, and that's opened up a lot of different possibilities, not just by what we're building here, but also Arbitrum Orbit and some of the other technology, which I won't go into too much, but let's just say that sort of stuff can help us scale even further and do a lot more fun stuff with the tech that we are given by blockchains.
Yeah, nice. Thanks. That's I think you broke it down really well. And I guess so that people are aware, I think here at OKX Wallet, what we're trying to build is basically a single point of access to experiences on any chain. And Wen, I just want to say a big thank you to you for the role that you've played in bringing Ecosystem Hub together, because today's space has played a big role in helping OKX Wallet users really understand the opportunities that exist on Arbitrum. And I think getting the opportunity here to hear directly from kind of the leading voices at some of the top projects on Arbitrum today is going to be super helpful for our community to kind of to begin to participate and try things out. So huge thanks for everything you've done.
Huge thanks to you guys. Yeah, there's a lot of love here, and yeah, I just want to say that this a lot of the stuff that happens on chain can be daunting for users, and I appreciate OKX. What you guys are building is gonna help essentially. All we're focused on at Arbitrum is onboarding new users, right? We're not really focused on competing with existing users and the existing pie of different chains. We're more focused on broadening our horizons and getting people who are off chain on chain again, or for the first time. And so the amazing things you guys are doing with the ecosystem hub, these one-click transactions, essentially abstracting so much of the user experience away. I think it's really cool. I think it's an absolutely essential thing if we want to onboard the next billion users, and many of the builders today will be like benefiting from the new users that they'll be getting hopefully over the next few weeks and months.
Yeah, +1 to that. So let's get started by onboarding the next few thousand to some of the top projects on Arbitrum via OKX. I would love to hand it over to some of the guests that we have on tonight, and folks, that's super high level questions. So really, just love to hear from you about your project or DApp, what you're most excited about right now, and why specifically building on Arbitrum makes sense for you and has done historically. Even though I know a number of you guys are moved multi-chain now. Obviously, love to understand a little bit more about the relationship with Arbitrum tonight. So I was going to hand over to Shreddy first, just like being conscious of the fact that he's hiding at the back of the plane. But I think, I mean, hopefully it's not turbulence, but I think he's probably having network difficulties. So Darius, should we start with you? Hey,
Yes, brother, I'm here for you. Let's do it.
awesome.
So, yeah, I guess in terms of the cross-chain approach from Vertex, I mean, you specifically want me to go into the cross-chain or start with Arbitrum and work
No,
out?
no, not cross-chain at all. No, just love to hear a little bit more about Vertex for people who don't know about it, kind of what you're
Yeah,
really
yeah.
excited about at the moment, and then yeah, wherever you want to take it, man.
Yeah, so Vertex, I guess, is a little bit different to some of the protocols that are on in that we run a little bit of a hybrid architecture. So similar to Arbitrum itself, actually, we have a application-specific sequencer. So what that means is we run our own tooling to direct transactions onto the chain. We settle into Arbitrum as well as a number of other chains. But the reason we do that is because we're optimized to work at very low latencies with very high throughput, even faster than the ones that Arbitrum operates at. And the reason that we do that is we're trying to replicate something that looks a lot like a centralized exchange experience. So often when you do things on chain, no matter how fast it is in the background, there's a lot of sort of clicking of buttons and waiting a little bit for a transaction to process, signing, these sorts of things. And what we try to do is create an experience that looks and feels more like the experience maybe users would be used to when they go to an OKX. So that means having very high throughput, very low latency, so that market makers can make good liquidity. And when users come and look at the screen, it just feels like it's moving in real time. And so that's been quite successful for us. And, Arbitrum was like a great place to start the product off because the users were just highly accustomed to perps because teams like GMX and Gains had kind of innovated on Arbitrum and sort of got people used to the perps trading experience. And then we kind of brought sort of an alternative model where we were trying to do something, a bit lower leverage, but maybe tooling that was sort of more geared up for slightly more professional traders. So cross margin, cross collateral, these sorts of things. And then latterly, we've been using that application specific sequencer to move to a bunch of different chains. So now we exist on 5 different EVMs, and users across all those different chains can now trade perps with each other on our order book. So actually, the really exciting bit now is that liquidity that we've created on Arbitrum over the last 18 months, we now kind of broadcast out into this network of exchanges, and users on all these other chains can interact with that liquidity and trade, and it creates all this sort of cross-chain flow. So it's been really cool, and it's meant we sort of operate across a few different communities, but kind of Arbitrum was the first place we called home.
Amazing. Thanks for sharing. I spent some time having a look through your Twitter today, Darius, and I love some of the stuff you've been sharing on your Substack. And one of the
Someone read
quotes,
it.
I
That's
think,
so great.
I just didn't want to let this moment go without quoting you. Am I allowed to? Is that okay?
Please, I'm scared which quote you're going to use, but do it.
It's suitable for work. So you said, well, you quoted, this is a quote from somebody else, but the quote is, bull markets always climb the walls of worry, bear markets slide down a river of hope, which I loved. And what you said is it's a common Wall Street proverb, but it's the first time I heard it and it left a huge impression on me. In fact, I think about it pretty much every day and it guides me as a founder. I love it. If you guys haven't, go check out Darius's Substack post because it's awesome. It goes through this kind of, I think, your journey from you to quote you again, turnaround guy to startup guy. But it's super cool. And I think speaks a lot about the product you're building at Vertex Brand. So yeah, thanks for sharing that.
Oh man, I appreciate that. You put a tear in my eye. I didn't think anyone would really read it. I was like, wow.
They were your words.
We'll put it out there. So it's great to hear it. Someone actually took notice. Thank you.
Listen, I'm gonna pass it on to one of our next guests. Let's move to Jonesy.
Yes, sir. Thanks.
Hey.
Shall I just detail a little bit about what GMX offers, or do you want to ask a specific question?
No, same setup. So I think if you can just intro a little bit about GMX, what you guys are working on and what you want people to know, and then a little bit about kind of your relationship with Arbitrum and how that works.
Absolutely. So GMX, one of the on-chain decentralized perpetual exchanges. I really appreciate OKEX's efforts in educating its users about the on-chain segment. I think it's very important that every user in crypto is aware of what's available nowadays on-chain and what leading blockchains like Arbitrum can offer. Arbitrum was launched a little bit more than 3 years ago, and GMX launched exactly at the same time. We're an on-chain perpetual futures and spot exchange. So that basically means you can trade perpetual swaps as well as trade spot. Perpetual swaps in this case being leverage trades with up to 100x. And you do that all directly from your own personal wallet. So it's all non-custodial, all permissionless. We're primarily live on Arbitrum, but also have been live on Avalanche for about 2 years already, and currently working on a omni-chain strategy. GMX's vision is basically to offer the optimal on-chain trading experience. So what people are used to doing on a centralized exchange, like an OKX or one of your competitors, we want to make sure that that is also available on-chain with the security that Ethereum offers, which you inherit through Arbitrum. So what do we want to make possible? Provide an excellent on-chain trading experience. That means fast execution, deep on-chain liquidity. Basically, what you're accustomed to when you trade on a centralized exchange and what is possible nowadays on an L2 blockchain like Arbitrum as well, because of its inherent characteristics in terms of low gas fees, high throughput. We've touched on a couple of those essential criteria already. Those make possible a very good on-chain trading experience. And we believe that it's important that crypto users are aware of what is possible now on-chain. And GMX is positioned as one of the leading exchanges where you can experience that, where you can come on-chain, come to a chain like Arbitrum, deposit some of your funds there, and directly from your wallet be able to trade a ton of different assets with excellent liquidity, with very fast on-chain execution, low fees. So everything that you like to have as a trader and everything that you are accustomed to from a centralized exchange venue, that is now also possible on-chain. As I mentioned, we launched together with Arbitrum, so we're very much integrated natively with Arbitrum. Been live for about 3 years now. GMX has had close to 700,000 users in that time span. To be exact, 696,000 users, which is an incredible amount. Generated 226 billion in volume. We have thousands of weekly users who are contented with the experience and come back as a result. So we believe we have a very viable product, and we're constantly building that out, introducing additional functionality, further optimizing that on-chain trading experience to make sure that everything is as intuitive as it can be, as permissionless as it can be, as decentralized as it can be, and that people come on chain on Arbitrum and feel like this is my wallet, my funds, my trades. I have everything in my own hands, and I can do what I want with the financial services that a protocol like GMX offers.
Nice, thank you for sharing. And Jonesy, so you guys have been around a while, kind of true heavyweights in this space. I'm interested. I mean, obviously, the platform is decentralized by nature, but anecdotally, are you experiencing kind of a new type of user that is trading perps, and perhaps people who have been, used to trading on a centralized exchange and moving to a DEX, or what are you seeing?
In my experience is that it comes and goes in waves. And that really has to do with the underlying ideals. When it comes to DeFi and permissionlessness and decentralization, they're ideals that a lot of users share, but in practice, people also want comfort. And that's why most of the trading takes place on centralized exchanges. And it's primarily when something occurs that makes us really aware of the risks inherent in custodial solutions, in centralized finance solutions. That's when the interest in permissionlessness and in coming on chain skyrockets, and people really start to appreciate the importance of self-custody again. So that's when we see a wave of new users come to on-chain venues like GMX, like our other fellow protocols in the space here with us today. So it really goes in waves. But we believe that ultimately, by continually refining the product, keep on being able to offer an even better on-chain trading experience, that ultimately we see that grow and grow over the long term, that the decentralized space continues to eat a little bit of market segment from the centralized finance space every year, and that as a result, more and more people will be coming on chain, particularly over this time span of multiple years. And that's the type of dynamic that we are positioned for and want to be positioned for.
Yeah, here to that. We're seeing a similar pattern at OKX, I think, where certainly uptake of usage for the OKX wallet and on-chain experiences through the wallet are increasing day by day. And long may that continue.
Exactly.
Yeah,
I think
thanks so much for sharing, John.
No, very, very happy to do so. No, feel free to. I could continue for quite a while, but I don't want to claim the entire space. So let's let one of the other
finish up,
invitees. Well, I was going to say,
I think
I think a lot of it started with DeFi Summer, which was already in summer 2020, and we saw this tremendous wave of users come on chain because of the downfall of some major centralized institutions. And I think we're going to see that dynamic play out. I think even many of the biggest centralized exchanges understand that dynamic is inevitable, is somehow even inherent to the crypto space, that more and more people learn about permissionlessness, about self-custody, about the responsibilities that come with that. And slowly but surely, we see that trend being realized. And it's I think that's why you see the biggest people in the space, the biggest parties plan for that and act accordingly.
Yeah, couldn't agree more. Cool. Let's hand over. In fact, no, let's stick with the theme of on-chain trading. Ryan, hey, welcome on. Same questions for you. Love just to hear a little bit about what you guys are working on and some introduction.
Yeah, I was just thinking that I wanted to add to the previous point of having more and more on-chain users. This is obviously a vision or observation that all of the projects that are here today see in the ecosystem. But at Mix, we sort of see this dynamic a little bit differently, because in this vision of my own, perhaps going into a couple of years forward, we probably see more regulated and safer central exchanges. So things like the FTX collapse, things like the Mt. Gox collapse, probably will not happen that often as we are seeing it now. So I think central exchanges are going to stay as a trusted source of trading going forward. So what we see actually is this increasingly more segmented market where you have these dedicated, financial investors who are basically just here to buy and hold the tokens. They would obviously prefer central exchanges, and you have this new waves of users who are realizing that there are countless investment opportunities on chain that they cannot otherwise capture if they stay in central exchange wallets. So they hop onto the decentralized wave. These are the kind of users are specific to us as a DEX protocol. So coming back to your earlier question on sort of why we deploy an Arbitrum, I think obviously Arbitrum is one of the most stable, fast, and affordable layer 2s out there. So we actually deployed earlier this year, and we did have this fierce internal discussion. Is this the right place to start? Obviously, because back then there were already a lot of successful perp dexes like GMX and Gates Network and whatnot. So obviously the competition there is going to be a lot more. But we want the best for the users, and that's one of the most important reasons why Mix and Arbitrum share something in common, is that we are trying to enable decentralized apps through innovation. So a couple of keywords here is decentralization and innovation. So what Arbitrum is doing is solving the sort of the bottleneck of the throughput on layer ones. So that's their solution. So what we're doing, what we're tackling, is more specific to the perpetual on-chain trading space, where to answer this question, we might have to go into a little deeper about the different models that we have today that's offering DEX. Is basically you have pool models like GMX, and you have order book models like or hybrid models like Vertex. So they have an order book and a pool model. So there are a certain trade-offs between these two models. So basically, with the pool model, you are more decentralized. If you're order book system, you are more affordable because of thanks to the centralized part of the system, obviously. So I think a DEX versus a SAX, the first and foremost thing is that a DEX is decentralized exchange. So to me, decentralization means, the service, once it's deployed, it's there for you forever. The rules are set, it's transparent. You own your funds, it's non-custodial. And basically, it's a democracy of finance, if you will. So none of that exists in a centralized model. So the problem the pool model actually faced was the cost. So the cost was actually brought down significantly after the Duncan upgrade. So internally, we think there are two pivotal moments for DeFi services. One, obviously, is the DeFi summer mentioned before, and the other one is the Duncan upgrade, where the on-chain cost actually went down more than 95%, even more than that on Arbitrum, because Arbitrum actually lowered their cost even more. So basically, Arbitrum is one of the cheapest chain out there today. So cost was a huge issue, but the cost of gas is no longer an issue because of the Duncan upgrade. So what MYX has managed to solve is that we have came out with our own sort of matching engine, what we call matching pool mechanism, or MPM engine. So basically, it's a variation of our order book system in a fully decentralized manner. So instead of having as a legacy, right? All of the DeFi protocols, we tend to love using liquidity pools to serve as counterparty to the user's positions. Whether you're a lending protocol, you'll be lending against the traders. If you're a swap protocol, then you'll be the counterparty to the traders on the other side. So this basically was fine until perp DEX use case, where you sort of have to solve the capital efficiency bottleneck. Otherwise, you'll be charging a fee that's too high in a setup where the users have to use leverage. So to give a contrast, if the users are using 50 times leverage and you're charging them 10 basis point For trade, obviously, they lost 5% of their principal when they open a position, another 5 when they closed. It doesn't make sense. So what we have managed to do is to come up with this new matching point mechanism where the pool is no longer serving as a counterparty to all of the trader positions, but only assumes the net difference of exposures while acting more as an intermediary rather than counterparties between the actual traders. So with this model, we are actually offering centralized exchange level fees and no slippages at all for the traders while maintaining 100% decentralization. So right now we're offering the lowest fee on MOIX is actually 1.8 basis point if you're a taker and negative 1 basis point if you are a maker. So that is the lowest fee that is available on chain today. So that's one of, I think that's the most important issue that we have to solve first. So I think there was another question about the exciting things that we look forward in the coming months and years. I think there's a couple of things. One is to providing more value to DeFi users. Like I said earlier, we have a specific group of people. These are DeFi users. So we have tried to define their needs more and more as we operate. We think trying to lower their opportunity cost is important. So basically, we're trying to introduce or include more collaterals like the restaking tokens or your saving receipt from a lending protocol, so that the user can capture as many opportunities on chain while also maintaining the exposures that they had to give up in order to invest in these protocols, namely the Bitcoin and Ethereum exposures. So that's one of the three things. The second thing is we're excited to reinventing the user experience of PerpDEXs. I think it's time now. The users when they're using a PerpDEX, they should no longer worry about having gas in their wallet. They should stop worrying about signing every transactions. Things that's really stopping the users to enjoy the trading experience, they have to go away. So basically, we are coming up with a solution to make that entire experience new. So the last thing is to really starting to onboard Web2 users with mass. So we're coming up with cloud wallets where users can set up a wallet with their phone number or email address and start trading right away without having any gas in the wallet at all. So these are the things that we look forward in the coming months and years.
All right, thanks so much.
Yep,
for breaking
handing
that
it
down.
back to the host. Yep.
Yeah, thank you. Thanks so much for breaking that down, and some amazing things you guys are working on. Just before we move on from perp dexes and on-chain trading, do any of the other guests want to respond to any of Ryan's thoughts or comments?
No, I think he touched on a number of really important points. I mean, ultimately, we're looking to offer the best user experience, and with that does come a lot of refinement and improvement that still needs to happen. I think the DEX space has come a long way, and simultaneously, there's still a bunch of things that have to be improved to offer more intuitive onboarding, more intuitive use. Abstract away a lot of complexity when it comes to gas, when it comes to what chain you're on, when it comes to what wallet you're using. Dumb it down, make it simpler, make it more intuitive, more streamlined. Those are all things that I know GMX is working on. I believe a lot of other protocols are working on as well. I think we've established the foundations very strongly, very deep liquidity, very reliable contracts. And from now on, it's really about refinement and continually making it even better for users to come on chain and trade.
Awesome, thank you. Cool. We're going to move on now. I'd love to hear from. Have we got Shreddy back? I don't think we do, right?
You've got Notch from Jones.
Hey, Notch.
Hey.
Take it away.
Yeah, sure. I guess kind of piggybacking off of a lot of the fee abstraction points with Jones, one of the things that we set out to do was to take a look at what's going on in the space, in the ALM side specifically, and try and think through how is it that we can try and be more efficient than our competition, maybe provide more features for less than our competition. And I think ultimately try and create a place where we're able to compete and thrive and expand. And when we took a look at ALM, for those that aren't familiar with that terminology, it's basically what we're doing is we're managing Uniswap. When I mean uni, I don't mean specifically uni, but V3 liquidity positions. And we're doing it in a way that maybe hasn't been done in the way that we're doing it before, but it's certainly, we think, much more scalable. One of the more interesting things that I've noticed as we've done a lot of B2B stuff, and we're going to be working a lot with Orbit chains, and we're really excited about some of that and really bullish on the future of Orbit, but is that you learn a lot about what is real kind of bad. Sorry, someone called me, of course, right when I was talking. You learn a lot about like what is real value add for users, and what is growth. And when you find that there's these stable strategies and peg strategies where you've got, let's say, like Easy ETH, or Renzo ETH rather, or Lido ETH, or any of these things, and there's these massive TVL numbers. Um, a lot of that liquidity is there, and the rebalancing of it is a costly exercise on other chains. And like another previous person here said about the security of the chain, one of our big reasons for choosing Arbitrum in the first place was the security of the chain. And so when I take a look at, you know, people that are interested in providing hundreds of millions of dollars of liquidity on other chains, and they're getting eaten alive by transaction costs, or maybe too much rebalancing that's going on when there's very little drift in these pairs, or they're doing the same with stable coins. Um, it's kind of confounding why folks would choose to post liquidity in a lot of other places. And so I think for us, what we're trying to do is educate people first and foremost, because I think a lot of people don't really understand that concept of kind of the rebalancing of these pairs and drift and how it eats alive your principal. But also just, how much a lot of these providers take. And so we're trying to take advantage, I guess, of all the features of Arbitrum, including low cost, and pass that along to users. And so that was kind of the thesis when we set out to do this. And, Orbit's going to be a big part of our future. But I think that thematically, a lot of people that I'm listening to here, and a lot of them I know, are here because of security, speed, and cost. And I'm not sure of, I'm really not sure of a better way to kind of explain the reasons why you'd want to build here. But um, for us, it seemed like a no-brainer, and that's kind of why we're still here.
Yeah, I think that's absolutely a fair point. When it comes to the tech and the infrastructure, those are absolutely crucial. But I think the other important element that makes Arbitrum so popular for builders is also really that community vibe. And that's what has allowed a real big DeFi ecosystem to blossom in a way that wouldn't be possible if it wasn't that supportive a community. And I think that's also important to mention, because you can have the best tech in the space, you can have very impressive blockchain characteristics. And if you don't have that level of support community, engaging founders who, engage with their builders, who give them a warm welcome, who make sure they know where to find everything they need, that is just as important an aspect when it comes to making a blockchain successful.
Totally
What
agree.
does that look like in practice, guys? In terms of the support you get from the foundation and community engagement?
When Moon?
I think you guys should answer this, right? Like, how do you guys feel about the support? If I answer it, I'm just going to start shilling.
Well, just to jump in from our perspective, for example, at Radiant, in the lending space, we've been here in Arbitrum pretty much since day one. It's also our home chain, although we are now cross-chain on other chains. But we feel that the support from the team from day one, in terms of networking with other communities, searching for synergies, of course, the grants that have been around, but the importance of the grant is when you boost a robust business model, if it's only there to offer crazy yields for the duration of the grant, that's not the point, of course. So all the importance of building a community, putting us in contact with other important apps in the ecosystem, I think that two of the important points of key pillars of Arbitrum, and we've sort of touched upon those over these AMA are infrastructure and ecosystem. So infrastructure in both of the tech and all the super cool tech aspects that Arby has, but there are other chains with cool tech. So there has to be something else. And we've said that the ecosystem, for me, that's community plus team. So the bunch of communities that are building together, that are creating synergies together, not focusing on competition, but really collaboration and building blocks to make this a greater space and a greater ecosystem, plus the team. And the whenever we speak with Wenmoon, with anyone from the RB Foundation, from the RB team, they're always looking out for opportunities, willing to put us in contact with other teams, thinking about new potential grants, support programs, which are really sound, robust, not just giving out money, and that's all. And I think that's really an important key pillar of Arbitrum. That's the infrastructure, the ecosystem, that being community and team. So that's been key for us at Radiance as day one, and we love to keep building. We love to come to these spaces where there are super top protocols and new ones that come along, and the RB guys are always concerned and trying to help us build with the new guys around, also with the OGs that have been here for quite a while. So kudos to all the RB team, and this is not chilling. It's really a feeling of being thankful to all that they've given to us.
Yeah, I'd like to echo what Isaac said there on behalf of Radiant, because for GMX, the experience has been very much the same. It's this collaborative approach, this long-term vision. It's the knowledge that if there is an issue on the chain, we can get in touch with the lead people at Arbitrum within a minute and get a reply within a couple of minutes. And that type of synergy where people are looking out for each other is absolutely crucial. And the second element, I think, is the composability as well, because GMX is more than just an excellent trading platform. Because of its composability, it spawned this ecosystem where there are somewhere between 70, 80, 90 DeFi integrators building on GMX. And that type of composable ecosystem is only possible with that right mind state of collaboration, focus on creating something that's bigger than just your own product. And that is also what Arbitrum has cultivated. So it's allowed this expansive decentralized finance ecosystem to blossom because of that mentality and because of the mutual support. And things like grants programs are only a minor aspect of that. It's really more the underlying support at the moments when you need it that allows everyone to flourish.
Yeah, let me jump in here before I run out of things to add. You guys basically cover a lot of things. I think with Arbitrum, it's all about two things. One is commitment. So basically, they're committed to long-term support to the ecosystem and the projects. I think that's huge, because with some of the ecosystem, they could be doing really great in a while, but then they sort of drop off as they move later in their stages to either stops building or stops supporting their projects. That's the first thing. And the second thing, I think, is know-how. So basically, these are the bunch of guys that understand DeFi super well, and they know how to help the projects to grow and what it matters to users, and they will help you and guide you through the process. I think these are the two things that I wanted to add to whatever they have said.
Love to hear it.
See, it was much better to come from their mouth than mine.
And now for the
When's
negative. No, I'm just kidding.
When's blushing? Hey Isaac, you said no shill time, but I think it would love to hear a little bit more for those who don't know about Radiant Capital and exactly what you guys are building.
Yeah, absolutely. We'd love to do a quick run through. So we essentially, Radiant is one of the leading lending protocols on Arbitrum, built and leveraging tech from Layer Zero. And the vision at Radiant was always to offer a seamless lending experience over many chains. So that people really didn't have to super understand what was an L1 and L2 bridging, and they could still move their assets from one chain to another. So deposit on one chain, borrow on a different chain, even repay loans on a third chain. We are currently on different chains, but Arbitrum was always our home chain, and they're live from day one. And the unique value proposition that we have at Radiant, because of course there are many other lending protocols on the different chains, is to share protocol fees with the users. So essentially, what you can do at Radiant is you can deposit and borrow, of course, and have some competitive rates for the assets we support. Then you can provide liquidity in the form of, for example, Radiant ETH. That depends on the chain, but on Arbitrum it's Radiant ETH. That's an LP pool, a liquidity pool. And if you provide liquidity from the first dollar, you start getting protocol fees. That's paid in blue chip assets. So it's not crazy assets. It's not only our own asset. It's blue chip assets. So that's paid out in Bitcoin, ETH, stables, depending on the chain. We've even reduced the bucket of tokens. So it's even less tokens to be more focused on the really blue chip assets. So you get protocol fees as long as you start providing liquidity from your first dollar. And then if you provide a bit more of liquidity, if you put more skin in the game, and that's not a lot, so it's only 5% of your deposit. So if you deposit $100 and you put more than $5 worth of liquidity, so it's a very reasonable threshold, you not only start getting protocol fees, but you unlock a boost in the form of Radiant emissions. So on top of the base deposit rates, on the base borrow rates that you're having, you have a boost of RDNT emissions. So that is, in that case, our native token. So that's in essence the TLDR of Radiant. So you can deposit and borrow, then you can provide liquidity and start earning protocol fees in blue chip assets. That makes us already stand out in the lending protocol space. And then if you put a bit more skin in the game, 5% with respect to your deposits, you start unlocking the extra juicy boost of yield in the form of RDNT tokens. So that's Radiant in a nutshell. But what we've recently introduced, apart from launching on new chains, of course, adding new assets, is we wanted to tap into those more degen users or users wanting to have a more risk-on profile of assets within the lending protocols. We always wanted to include to our core markets only blue chip assets. So as I said before, Bitcoin, ETH, LSTs, LRTs, stables, the top assets that we all know. But we also wanted to launch something for those wanting to trade and operate with meme coins, with maybe smaller LRTs, smaller assets which were following hot narratives, which were hot at the moment, but which we could not include into our core markets. That's why we recently launched, that's over the summer, so pretty much 2 months ago, we launched RIS. So that's our isolated markets, Radiant Innovation Zone. That's RIS. We wanted to RIS up crypto, and hopefully everyone can tap into RIS, jump into the new offering, and check out for themselves the new assets that we're offering, of course, on Arbitrum and on our other chains. And people essentially can deposit and borrow assets which are normally not found on other lending and borrowing protocols. And after all that we've heard from the perp exchanges that we have here in the show today, we also offer longing and shorting of those assets. So it's think assets like meme coins, LRTs, LSTs, smaller caps, hot tokens, eventually AI tokens, eventually RWA. So all the hot narratives of crypto condensed into the top protocols, the top assets of those narratives, those will be available on RIS, and many of them are already available on RIS to go and trade, go long, go short, or only deposit and borrow them if you want. So that's not available elsewhere. Normally, we are more competitive than other platforms where you can go and long and short manually. We offer one-click strategies, so it's super easy. You just one click. That will be live very, very soon. You only one click and you go long or short with the leverage that you want for those assets. So that's essentially what Radiant wanted to offer. Core markets for those more keen on blue chip assets, sharing protocol fees with the users, and now very recently on all our chains, we are including and we are launching those more risk-on assets, DGen assets for those wanting to go long or short with those assets. Back to you. Hopefully that painted a good picture of what Radiant is.
Isaac bringing the riz. I love it.
Well, it wasn't me who came up with the name, but people are loving it, and we have a Galaxy campaign for those interested to go and get some XP points. So you can check all on our socials. No more shilling time. You can check it in radiant.capital. Follow us on X socials, and you can check everything regarding our Riz Up Crypto Galaxy campaign and all the offerings that I was sharing with you guys.
Awesome. Thank you, Isaac. Hey, so this brings us up to the hour mark. So I think we'll probably close things out now. Just wanted to say a really big thank you to everybody for joining. If you're listening in and you want to learn more about Arbitrum and a lot of the projects that we learned about tonight, do go into the OKX app, go to the Discover page, and you'll find the ecosystem hub. In there, you can find quick links to all of the projects that we just talked about, and you'll be able to learn a lot more about them from the security of the OKX wallet. Real quick shill time. If you don't have the OKX wallet, please do download it. We've just completely revamped it. You can access millions of tokens from the OKX wallet app. Here's a stat for you. 120,000 new tokens become available on average weekly on the OKX wallet for trading, which blows my mind. It supports every major network, of course, including Arbitrum, but there's over 100 blockchains supported now. And most importantly of all, it's free to use. So OKX doesn't charge a fee across everything on the wallet. So please do go check it out and let us know what you think.
Wait.
Facts. Hello?
Over for maybe 5 minutes. I think we left out EY from Pendle.
Oh, EY, I'm so sorry.
No, it's okay.
Dude, so sorry.
Yeah,
I thought we covered everybody. My
5
bad.
minutes.
Please go.
Yeah, 5 minutes. I'll just do a quick one.
Take your time.
So hi everyone. So for those who are not familiar with Pendle, just a quick introduction of what we do. Essentially, we're a yield trading platform. So what that means is that we allow users to come to our platform to trade yields. So we take any yield-bearing assets onto Pendle, and then we split it into two different components, which is the yield token, which accumulates the yields and points, and on the opposite side, there is the PT tokens, the principal tokens, which represents the principal token, right? So essentially what users can do when they come to Pendle is that they can either leverage farm by swapping for YT tokens, which is a very popular move for those DGen users out there who wants to farm points in the most capital efficient way. And if you think that's the current market, the current points market is too heated up, you could instead get the fixed APY by swapping for PT tokens. So that's kind of like a high level of what Pendle offers. And yeah, I think we've been on Arbitrum since early last year, and that's probably one of the best experience that we have made because but by joining Arbitrum and because of the reasons that the various speakers has mentioned just now, right, whereby there's a very strong DeFi community, there's very strong support from the foundation, and the relatively lower gas fee price help us to onboard the first wave of retail users to try out what yield trading is like. Because bear in mind, back in early last year, the concept of yield trading is still relatively unknown. So we are very grateful of the support that Arbitrum has given, and till today, I think Arbitrum is still we are launched on multiple chains, but Arbitrum is still the ecosystem that gives us most of our trading volume. Just because of the strong community that we have in Arbitrum. So yeah, so that's a quick introduction from my side.
Awesome. Thanks, UI. Hey, yield trading. I think that might be a concept that's new for at least some of the OKX community. Can you break that down a little bit for us?
Yeah, so essentially, let's pick an example, right? So let's say STETH. STETH provides users that stake their ETH to get proof of stake yield, which is around 3 to 4%. Now, if you if you feel that the yield can be higher in the future, what you can do is you can swap for the yield tokens on Pendle, and that allows you to accrue all the yield component till maturity, right? So on the other hand, if you feel that the yield of STETH is going to go down, what you can do is you can fix your APY by swapping for PTs on Pendle. So essentially, what you're trying to do is you're looking at the yield of a particular asset, and you're trying to speculate whether you think that it's going to go up or go down in the future, and then what you can do is you can represent the position on Pendle.
Nice. Thanks, UI. Yeah, and I think you guys, I was looking earlier, it's like $2 billion in TVL or something. Unbelievable numbers. So thanks UI for sharing, and so sorry for missing you out. Great to hear from the Pendle team, of course. And a big thank you to everybody who joined tonight. It's been great to learn a lot more about Arbitrum and a lot of the projects that are building atop Arbitrum. Wishing everybody a great rest of the day. Really hope Shreddy touches down safely wherever he's heading in the world. And thanks to everybody for tuning in, and we'll see you soon for the next episode of Friends with OKX.
Thanks,
Thanks,
everyone.
everybody.
Thanks very much, guys. Take it easy, bye.
Have a great day, everybody. Happy trading.